Now, for those dividend investors, sort of like myself, that are looking to build out a long-term dividend-paying portfolio to potentially even use to retire off dividend income early, it can be pretty confusing to know which stocks or which ETFs you should buy into, because lots of different ETFs, for example, offer different things, and even if they both offer the potential for wealth in the future, it is of course sort of hard to know which ETF is best for you. Now, in this video, I'm going to share with you guys some numbers behind what it could look like if an investor bought a relatively small amount of the JP Morgan Nasdaq Equity Premium Income ETF JEPQ and compare that to the same amount invested of the Schwab US Dividend Equity ETF or SCHD. Now, what I'm going to share with you guys might be sort of shocking and a little bit confusing, because I'm going to show you how by investing into something like JEPQ could potentially allow you to retire much earlier than that compared to investing into a dividend growth beast like SCHD. And this is all going to be dependent upon one major thing. So if you're a dividend investor looking to potentially retire early, I promise you're going to want to stick around until the end. So with that being said, drop a like down below, subscribe, and let's get right into this one. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. Now, the reason I wanted to make this video today is because I was just recently talking to a newer dividend investor that was asking me something that I hear quite often. They asked me, why in the world don't I just use the majority of my cash balance and or sell off a lot of shares of different stocks and ETFs in my portfolio and go all in on something like JEPQ? Now, they sort of have a point, because over time, JEPQ, for example, has grown in price pretty consistently, and on top of that, this ETF offers a massive amount of income compared to even something like that of SCHD. Now, my main reason on why I personally don't buy all JEPQ, for example, is because SCHD, for example, which is one of my larger holdings, offers massive dividend growth, or at least it has historically, which means at least based off of what's happened in the past, I'm going to earn more and more in cash flow basically over the next several years. Where JEPQ, on the other hand, even if you're going to get a lot more income a lot faster, say 50 cents per share per month, which is much more than that of SCHD, the dividend growth is not really going to be there when it comes to JEPQ, and whatever this ETF pays more or less is probably what it's going to more or less pay. Not to mention, when it comes to SCHD, this ETF also has more growth potential, and this is because there's no cover call overlay. But it actually had me thinking that I should probably break down the numbers between SCHD and JEPQ, for example, and see where the inflection point is between both these ETFs, and look at the number one metric that I think is most important when it comes to figuring out which is better for you. Now, in my opinion, that most important metric that I think is going to either make or break whether or not it's probably worth investing into something like JEPQ versus SCHD. What I think the main thing is going to be is how much money you have to invest. Now, I say this because JEPQ, for example, if you have a massive amount of money to invest in something like this, that's offering almost a 10% yield on the 30-day SEC. Well, if you have, let's say, $500,000 or $1 million to invest into JEPQ, well, then at that point, if it's yielding around 10%, you're going to be earning around $100,000 in dividends or income right off the bat, basically. Where SCHD, for example, even if you invested around $1 million into SCHD, you're going to only earn around $35,000 more or less, because this ETF only offers around 3.65% yield. Now, the caveat to this is that SCHD over time probably, like I said, will grow a lot faster because of the ETF strategy, and of course because there's no cover call overlay to cap the upside. And on top of that, when it comes to SCHD, at least based off of the previous dividend history, you're going to get paid more and more in dividend income over the next years, at least if history were to repeat itself. But like I said, I thought it would be beneficial to make a video actually showing you guys the real numbers behind this. So let's go ahead and do that right now. So I built out two different models with this dividend calculator. For example, with a $100,000 starting principal budget. This can give you sort of an idea of what we're talking about and where that intersection point might be when we're comparing SCHD to JEPQ, for example. Now, like I said, if you have a massive cash balance and your goal is to retire off dividends and distributions, well, obviously JEPQ might be a better option because it's going to get you there a lot sooner. But again, remember, SCHD has more growth and more dividend growth, at least historically. So based off of a $100,000 investment into JEPQ and a $12,000 annual contribution on top of that, a 10% annual dividend yield, 0% dividend increase from there, 5% expected annual share price appreciation. Again, all these numbers are going to be just estimates, so keep in mind. DRIP is going to be turned on and distributions are going to be paid out monthly. Let's see what 100K into JEPQ gets us. Now again, just for the context of this specific video, I wanted to sort of see when the dividend income can get to the point to pay for all your bills or for you to quote unquote retire. Now, how much do you need to retire? That's going to depend on your expenses and how much money you want to bring in per year. But just for this video's sake, let's go with an example of $50,000 per year. So JEPQ, more or less at 18 years in of investing, would reach around $50,000 in income per year from the ETF. Now, if we compare the same exact thing to SCHD, for example, which offers around a 3.65% initial annual dividend yield, around 8%, 9%, 10% expected annual dividend amount increase, which let's just go with 8% to be conservative, around 8% expected annual share price appreciation, again, I'll just estimate it, quarterly dividends and DRIP is going to be turned on once again. Now, for this example, it would take SCHD around 20 years more or less to cross over that $50,000 line, so just about a year or so outside of that of JEPQ. Now, what's crazy about this is that SCHD's initial dividend yield is about 3 times less than that of JEPQ, but even with that, the amount of growth potential and dividend growth potential that SCHD has, it doesn't take really all that long for SCHD to not only catch up with JEPQ, but also surpass it. Because not to mention, after 30 years of investing into JEPQ, for example, just based off these numbers, again, all just estimation, after 30 years, this portfolio would be worth just shy of $3 million. Now, SCHD for this exact same time frame, after 30 years of investing, we'd be at around $4.3 million, or around 1.4 million more than that of JEPQ. Now, I make this video not to say that investors should, of course, invest into SCHD versus JEPQ, because in the long run, you're going to have more of a total return, or maybe possibly build even more wealth over the next, say, 30 or so years. But I do think it's just a good reminder that certain investments out there could be a little bit short-sighted, and just a reminder that it's very, very hard to outperform names like SCHD, like the SPY, like DGRO, like a lot of these names that have consistently offered 13%, 12%, 11% in performance year after year after year. Now, like I mentioned earlier, if you are an investor that has a large amount of money that wants to sort of speed things up, use the super yield of JEPQ, for example, and get some income really rolling in a lot sooner, well, of course, the JP Morgan Nasdaq Equity Premium Income ETF JEPQ could be a great tool to do so. Now, for me personally, as you can see right here, this is my long-term portfolio. Every single position, more or less, that I hold as of right now, I have a nice mix of different names that have some growth potential, like take my 1,001 shares of Apple stock, and I also have some pure income plays in here, like my almost 3,000 shares of qyld. And this is just simply because my objective as a 32-year-old dividend investor, I'm trying to build a portfolio that's not only going to take care of my bills and all my expenses in the future, but I also still want my portfolio to grow over time, and that's even if it's on the slower end of things. So because of that, I've been mixing up different names in my portfolio over the past several years, about 8 or 9 years to be exact, and I've been buying different things that I at least believe can grow over time and also pay me a ton of income basically from the start. Now, if you're an investor that does not care about income, or of course if you don't care about growth, well then maybe point your portfolio towards that direction and buy different stocks and ETFs that make sense and might fit better. But for me personally, I like to have a little bit of mix of both, because again, I want some income, but I also want some growth long term. So now that I shared with you guys exactly how long it would take based off of a $100,000 investment into JEPQ as well as SCHD, two very, very popular ETFs in the dividend investing space, and I share with you guys that even if an investor bought JEPQ, they would potentially be able to retire a tiny bit earlier. Long-term SCHD, based off of the previous numbers that we came up with, will still probably outperform over the next several decades. I lastly, most importantly, want to hear from you guys down below. If for whatever reason you were only allowed to either buy into JEPQ or SCHD, which would you personally hold on to for your portfolio? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like in it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.